We have some new Yieldboost ETFs by Graniteshares that we need to talk about. Some of these are boasting distribution rates of 49% plus. These seem like they're focused to be income ETFs, which passive income investors like myself would absolutely love. So we're going to go over each and every one of them. There's two new ones, and the rest were launched around the beginning of 2025. So they're still very, very fresh. But I see what Graniteshares is doing. They are targeting our audience as those who want to make good, solid, reoccurring income, as well as maybe some price appreciation, but only time will tell. So we're going to get into it, check out each of these individual funds, and I hope you guys enjoy. Don't forget, if you are interested in ETF investing, passive income, and making money in the stock market, to like the video and to subscribe so you don't miss any future content, and it's all for free. So with all that being said, let's roll that intro. Starting off on the Graniteshares website, I'm going to navigate to their Yieldboost ETFs. Now, they have a lot of ETFs on here, leverage and inverse single stocks, income, gold, commodities, etc. But the Yieldboost is what I think is going to resonate the best with the audience, aka all of us, because it's a focus on that income and that high yield. Now, one thing I will say is these are new. Some last couple of weeks, it seems, and some started trading in early 2025, meaning the market has not been kind to these. And so I want to take that into an account early on, where if you're looking at these and how they've been trading, I doubt we're going to see that consistently, simply because the market just dropped. Now, you guys know, as income-focused investors, the last thing we want is NAV erosion. So what I'm looking for with these ETFs is to see them maybe rise a little in price, but consistently pay out high dividends without that steep drop-off that we've seen with a lot of other high-yielding ETFs. So I'm really curious how they're going to trade. We're going to jump in and look at each individual one, and I'm really excited for this video because these may be the ETFs of the future. Starting off on ticker YSPY, the Graniteshares Yieldboost SPY ETF. You guys know I'm a fan of SPY for sure, and I think that this one could do well in my portfolio. I do not own any of these yet. I am definitely going to be checking all of them out, particularly this one because it is probably my favorite, but there are some new ones that need to be talked about as well. The Graniteshares Yieldboost SPY ETF, or YSPY, is designed to maximize yield from option strategies linked to the S&P 500 index, SPY. To generate yield, YSPY sells put options on leveraged ETFs linked to the S&P 500 index. To try to mitigate extreme down movements in SPY, YSPY buys put options on leveraged ETFs. YSPY aims to make monthly distributions. Now, I like this because basic product overview, they are mitigating some of the fear of a crazy drop in SPY with these put options. Now, there's a lot that goes into these. They're very options heavy, and if you're not an options expert, which I am not, it can be confusing. So yes, I was a little confused by these initially. I had to read it like 20 times to understand it fully, but it does make sense. And I will say the key features are exactly what we are looking for as income-focused investors. Generate yield through option selling on a leveraged 3x exposure to the S&P 500 index, SPXL. Now, I will say anything leveraged, especially 3x, is very risky. And these funds say they are very risky, but with high risk comes high rewards. And that's why I'll be tracking them and seeing how they perform so we can see if it's really making people money, because the distribution rate on YSPY is 49%. Absolutely phenomenal. But there are other factors we need to look into as well. So the leverage exposure, YSPY share price will be leveraged to the S&P 500 index, move up and down, exactly. Meaning if it goes well, it's going to go really well. If it goes poorly, it's going to go really poorly. But what do you think the S&P 500 will do short to long term? And that's what you have to think about when you're investing with leverage. I'm getting more and more interested in leverage. And to be honest, the reasoning behind it is I just don't have a lot of money. Because if I had 100,000, 200,000 to invest and I could really get rich quickly with investing, it'd be phenomenal, but I don't. So leverage, a little bit higher risk. Maybe I'm a little bit younger. We'll see how it goes. I'm not going to blow all my money on leverage, I promise. We'll see. Anyways, and then we have the risk control portion, which I also like. YSPY buys put options to help mitigate against extreme down moves on the S&P 500 index. And we don't see a lot of crazy moves with indexes like the S&P 500. I mean, in comparison to like Tesla, vastly different. We've only had a couple of dividends paid out so far with YSPY, but it paid out April and it pays out monthly. Very solid. We had $1 a share and then we had 81.25 cents. Very good, very high yield, very high distribution rate, I will say. But we need a few more to see exactly how it's going to continually pay out. you can go down and see the performance. Performance has been bad starting off, but it is bouncing back now. And with the dividends, it is in the green. I will say that. But another factor we need to look at is the total annual operating expense ratio, aka how much money are we going to pay for this ETF? Because it is a lot of options. And if you don't know, options take a lot of time and a lot of knowledge to write or to buy. And so you can't just simply do something like this on your own easily. And that's why the fee is a little bit higher, 1.07%. Not as bad as some of the weekly payers, but this is a monthly payer. So it is a little higher than some that we've seen, although I've seen some personally into like the 10% range, which is absolutely nuts. So, but like way back when, if you had anything over like 0.2, it was insane. So the fees are going to keep going up, but if you're getting good income and it's negating how much you're paying for it, I am all in 100%. You can go through, check out what it's invested in, all that good stuff. But I'm going to jump into our next fund because I want to move quickly and showcase all of the ones that this company has to offer. Now we have TQQY, which is the Yieldboost QQQ ETF. I'm happy about this one. You guys know I am a fan of QQQ. If you didn't know that, you're not following my second channel, which is Spencer Invest Stocks, which ironically I'm talking about ETFs on there as well now too, mostly growth, all about growth ETFs, and QQQ and SPY are two of my largest holdings ETF-wise. And so go check out my channel down below if you're interested. I'll link that there for you guys because it's a little bit slower building, but technically safer. But I am interested because now we're seeing them tie together with these Yieldboost ETFs. So this is going to be the same as what we saw with YSPY. It's going to generate options on TQQQ, which is the 3X NASDAQ 100 index. More leverage, more risk, like I said earlier. And if TQQQ goes up, we're going to see this fund go up and good distributions. And if it goes down, well, the same because it's a leveraged ETF. And again, we have the risk control portion, which is definitely important. I think it's a really big factor. A lot of these ETFs that we've been tracking don't do this. And that's a main factor that can help you in the down market like we just saw the last couple of months. So it buys put options to help mitigate against the extreme down moves on the NASDAQ 100 index. I'm not going to go through the full breakdown. We have seen a few higher distributions, $1.75. So it's paid out a little bit less than YSPY, but the distribution rate is higher. Interesting. Now, this is definitely another one I'm interested in. I am a big fan of QQQ, like I already said, but there's some new ones we definitely have to look at. Next, we have the single stock ETF. So we have Graniteshares Yieldboost Tesla ETF, TSYY. If you don't know, Tesla took an absolute downfall in the beginning of the year. And so TSYY hasn't been performing as good as I had hoped for the beginning of the year. But with Tesla making a comeback, I think TSYY will follow suit. And again, it is cheaper. It's on sale now. But the distribution rate, 147.3%, is absolutely insane. Now, why is it so high? Because the dividends have been very solid, but the price has been dropping. And so that's going to impact it for sure. Now, one thing that's important to note, these single stock Yieldboost ETFs are only a 2x leveraged. It's definitely a good idea because Tesla is, it's volatile city. It's all over the place. It's crazy up, crazy down. And that's how I like to trade sometimes. But if you're leveraging stuff, it can be a lot riskier. Even if you do believe in the long run, it's going to go up. It's hard to stomach some of those downturns. So it's going to generate yield through option selling on a leveraged 2x Tesla ETF. We have the same sort of thing. It's going to be leveraged to the Tesla share price. So whatever Tesla does, it's going to be leveraged 2x up and down. And it's going to have the options to help mitigate. It's going to buy put options to help mitigate against extreme down moves on Tesla. Now, one thing I do want to talk about, the last distribution was $1.40. Very, very solid. We saw one all the way up to $2.50, which is crazy. Most of them have been over $1 so far, which is wow. And I will say there's some key things. These ones all have a similar expense ratio, pretty close actually, I will say. But when it comes to Tesla, you guys know I am a massive fan of Tesla. It scares me a little bit with leverage because I've been trading it for so long that I know how it trades, and I know it trades with a lot of volatility. But still, it's a monthly payer. It's one I will look at, especially when the market settles down. But I will be watching this one probably closer than any of the rest, not necessarily to buy it, but just to see the performance. Because although it is a little bit less risky than some of the others because it's a 2x versus a 3x, Tesla is just, it startles me with some, it's a company like when it had $1 trillion market cap, you would still see 10, 15% swings in a day, which is absolutely nuts. And I will say the secondary idea for these ETFs is you're going to get some price appreciation, right? The fund's secondary investment objective is to seek exposure to the performance of one or more exchange traded funds whose shares traded on the U.S. regulated securities exchange. Yada, yada, yada. That seek daily leverage investment of a result of 2x, 200% the daily percentage of the common stock Tesla. So growth has some potential, but since we saw Tesla fall by like 40%, these things have been beaten up. Now there is a light at the end of the tunnel. Tesla is rebounding, as well as the next stock we're going to talk about, which is NVIDIA. Ticker NVVY, the Graniteshares Yieldboost NVIDIA ETF. Now, we're going to see something similar to the Tesla one, so I'm not going to dive too far into the details, but this is one of the two new Yieldboost ETFs, which I think has some potential because NVIDIA is insane. And I track NVIDIA very, very closely. I don't like to directly invest in NVIDIA, but this company buys so many other companies and invests heavily into so many other companies involving AI, involving microchips, involving everything under the sun when it comes to tech and that industry. So I am definitely a fan. I just think NVIDIA is a little overinflated for how I like to invest, but I do think over time, since it is slowing down a little on the growth now, it's had a pullback, it will do well. And so I think for NVYY, there's some potential here. Now, again, similar to Tesla, we have the same strategy. It's the 2x long NVIDIA daily ETF that they're going to be writing the options on. They're going to have the safety net. They're going to do, I believe they'll have the safety net. And then we're going to see the same thing where you get some price exposure as well based on how NVIDIA trades. Similar, really interesting. When you compare NVIDIA to Tesla, I would say NVIDIA, even though it's been in a downtrend, trades with less volatility than Tesla. And I don't know how much that's going to impact the distribution rate, but I am really curious to see the first dividends. So really curious about NVYY, but let's check out the Bitcoin ETF by Graniteshares that I think you guys are going to want to see. Similar to the Tesla and NVIDIA ETFs, we can see XBTY. It is the Graniteshares Yieldboost Bitcoin ETF. Now, it does similar strategy. Income from option strategies linked to the 2x long Bitcoin daily ETF to generate income, which is phenomenal. We love income. And it sells put options on leveraged ETFs linked to the 2x long Bitcoin daily ETF. So what's phenomenal with this is we do see some volatility with Bitcoin as well, but there are times in the market where crypto as a whole kind of slows down. It's a cyclical asset. It moves kind of interestingly. You can start to track it, but it kind of always pulls one over on me. I always forget to buy when I'm supposed to, and I sell when I'm not supposed to. But, you know, I'm a dividend investor, so Bitcoin's a little over my head sometimes. But if you're in a spell where it's not really going up too much or down too much, this might be the play to get some insane distribution, some crazy dividends, and make that income on your money when you're not sure if you want to invest directly into Bitcoin just for it to go up or down. If you know what I mean. Of course, you're still getting some investment into these Bitcoin ETFs, but you want current income rather than waiting for the price to move. So I'm really interested in this one, and I want to know what you guys think. Which one of these is your favorite? Have you bought any of these? Are you debating buying any of these? And again, drop some comments in the comment section down below for what I should talk with Mr. Rind about. He, again, is a really nice human being, and I'm really excited to get to pick his brain and to get your questions and utilize them to pick his brain as well, which will be coming hopefully this week or early next week. As always, I appreciate you guys so much for watching. If you are interested in this video, you will find some value in these that are popping up on your screen right now, particularly the weekly dividend ETFs that have been performing really, really well. Thank you guys so much for watching. Hope to see you in the next video.